Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today is episode 178, 2022 Market Outlook. Thank you for joining me back on another episode of Upticks. I hope all of you out there had a happy new year. I can't believe it's already 2022. Time flies when you're having fun, as they say. For today's topic, one of the most popular questions I've been getting as we've been reviewing with our clients is, Jake, what is your market outlook or forecast or prediction for 2022? And I'm going to go over just that today. But first, I don't think it'd be proper to talk about our outlook before looking at the past. So for 2021, which for many people, me included, felt a lot like 2020. And the reason is the pandemic surged and it feels like it just rolled into 2021 and a lot of things were the same. We did have emergence though of meme stocks going hyperbolic. Cryptocurrency is completely more mainstream than it was before. And the market had another breakout year. In fact, the S&P 500 for 2021 returned over 25%. And in 2020 returned over 15%. And in 2019 was up again more than 25%. So we've had 3 years in a row of above average growth. And the historical average for the S&P 500 is around 9%. In fact, the last time we underperformed was a negative year, and that was back in 2018. Now, saying all that, that doesn't mean just because we've had 3 years in a row of above average performance that this year is necessarily going to be negative. And like I said, I'm going to get into what my 2022 outlook is. But most importantly, it's remember to look back and say, wow, even during times of extreme uncertainty and panic and human travesty, the market has been quite resilient. And a lot of people have been asking me, well, why is that, Jake? How can things be shut down and the media make things sound so bad and the market up so much? And the reason is all boils down to earnings, corporate earnings. And I talk about this a lot with our clients in our private meetings. But ultimately, if a company is making more money than expected, that's the key piece here, than the expectation, then therefore the company or stock is worth more than what is expected or what the market has priced in. And if that happens, that's when you see asset levels start to appreciate. And that's what happened. And so in 2020, when the COVID-19 swept the globe, if you remember, the market crashed 30% basically in 1 month, and all expectations went away, right? Everything was bad. Companies were going to go under. People were going to lose their jobs. Everybody was going to go bankrupt. And that didn't happen. And slowly, especially the good companies, pivoted, adapted, shifted their focus, and found ways to ultimately satisfy their customers or the consumers. And if you look at a stock market chart, it dips down and shoots right back up because, again, the world didn't end and expectations were lowered so much that when companies started firing things back up and making money, we rallied. And that's what happened in 2020. And so that's why we ended up with a positive return, because things got really bad and then they weren't so bad. So then that cycled on through 2021. And in fact, unemployment numbers have been great. So people that want a job mostly have a job. Wages are up. So in 2021, people were making more money, broadly speaking. And we had supply issues. If you remember, all of the tankers that are still an issue parked off, the shore of California, so people couldn't get their stuff. So we still have this demand, and some would argue more demand, because if we're not going to work, we're sitting at home on Amazon shopping, right? So if you have more demand and less supply, well, that's what's causing ultimately inflation right now. But it also causes companies to make more money because things are super efficient, right? They're making things as fast as they can sell them. And so that's causing them and their margins to ultimately do better and again, have more earnings. So that was really much of the story for 2021. You say, okay, Jake, that's fine and dandy. what's going to happen in 2022. And I'll get to that right after a quick commercial here. So again, thank you so much for subscribing and tuning in to my show, Upticks. It's hosted right here on YouTube and your favorite podcast platform. If you like our content, I really would appreciate a thumbs up or a 5-star rating. That's the best way that other people can see it. I also send out a weekly email called the Retirement Report on Tuesdays at 10 o'clock. So if you're not subscribed to that, please let me know, and I can certainly add you to that subscriber list. An easy way to subscribe is simply to go to falconwealthadvisors.com under our Advisor Insights tab. You can find it right there next to my bio. Also, I'm out there on various social media platforms. So I'm on Instagram, Twitter, LinkedIn, and Facebook. If we're not already friends, please feel free to send a friend request. I love expanding my network. Also, my company, Falcon Wealth Advisors, is on the same 4 platforms. Okay, so to the point of the whole show, where is the market headed in 2022? Well, first, we need to talk about what we know and what we don't know. What we know today is that inflation is much higher than it's been in the last decade. In fact, it's over 6% currently. And we're starting to feel that at the pump and at the grocery store and other places. And so what we've been doing at Falcon Wealth Advisors is we have rotated our individual stock portfolio into sectors or companies that we think will benefit from a higher inflation market. And that's really why our clients hire us. Now, again, we're not trying to predict the future, so we maintain our very diversified stance, but we're not ignorant to the fact that, hey, inflation is here. It's not going away anytime soon. Why not take advantage of that opportunity for our clients? And so we've tilted our portfolio already into some more inflationary components that, again, I'm not going to broadcast here on Upticks, but if you do want to have a conversation about it, I certainly can set up a time to talk, or we can connect you directly with our traders to discuss what we've done. So that's what we've done, knowing that we have inflation, right? We know Omicron is still a thing, so we're being very careful on the reopening stocks and what that is going to look like. We also know we're going to have a midterm election come towards the end of the year, so we're taking that into consideration, and we're dealing with political risk across the globe, particularly in China, with them batchening down their laws. So again, we've taken all of that in consideration in our portfolio and made the proper adjustments. Now, there are some huge unknowns out there, and that's why you don't want to get too risky with your portfolio, because we still don't know how bad COVID is going to be, right? And many people argue that maybe it's here to stay, and every year we've got to get a booster, and there's different strands, almost like a second flu virus. Side note, that's what I'm going to be watching very closely here in the coming months, because if we have a bad flu season, which if you remember last year, we basically didn't have a flu season, which was great. But if we have a bad flu season topped with Omicron, I'm just a little nervous of what that's going to do to hospitals and the workforce and so forth. So that's really probably top of mind today. But again, looking at that, we don't know how severe Omicron is going to continue to persist or for how long. Just like you, I want to get back to some level of normalcy. The reality is that's the world that we're living in today. So we adapt, we pivot, and we adjust. Ultimately, though, if you're watching, the news or reading something and you see somebody predicting a market crash or a huge rally, you have to be careful because nobody really knows, right? So what we know today is inflation is here, unemployment numbers are down, Omicron is still presenting itself, and we've got political risk in China. That's really where we're at today. And things that we're focusing on is making decisions based on the facts of what we have. Now, we know there's some uncertainty with the election. How bad is Omicron going to be? What else is out there? And that's why, again, I can't reiterate this enough. It pays to stay diversified. And that's what we're doing ultimately for our clients. So to sum it all up, we've pivoted our portfolio. Our market outlook, if you want to kind of put a stamp on it, is we know some certain economic environments are different than what they have been, and we've adjusted accordingly. We don't know what the election or how bad Omicron's going to be. If I had to guess, I would expect more volatility this year, and perhaps maybe a little bit under the average if I was a betting man, which I'm not. So again, we had 3 years in a row of above average returns. It's called, reverting back to the mean. You can't always be above the average, or therefore the average will ultimately get adjusted. So at some point, we're going to have a below average year. Doesn't mean it's going to crash. It just means we need to be smart about where we're investing and how we're investing, staying diversified, and ultimately rebalancing the portfolio as events happen, not on time, but again, as the portfolio shifts, we're monitoring that and adjusting accordingly. So if I had to guess, again, more volatility, I would say that we probably would be a little bit below average, would be normal for the market to cool off a little bit because it has been running very hot and it looks great and we love it. But again, we know that if it's going to revert back to the mean, it would make sense for it to have a cooling off period before it continues its surge upward. So that's where we're at today, right? So again, market outlook, inflation is here, unemployment numbers are down, Omicron's still a variable, the midterm elections are still a variable. We're going to be nimble, we're going to stay active, and we're going to do what we can do to not only maximize on the current environment, but protect our clients against future potential volatility. Thank you so much for tuning in. As far as fun items for today, I don't have a lot. Corey and I went over some fun ones last time. Yellowstone finished. I really loved watching that series. Still reading this super long novel that's actually really good, The Amazing Adventures of Cavalier and Clay. I just finished Colin Jost's book, A Very Punchable Face. So those are some good ones out there that I've enjoyed. Like I said, hope all of you out there are staying safe and healthy. I did do a survey, which is very interesting, of our clients, and they did suggest that I have more podcasts or episodes of Upticks about the market. So stay tuned on that for 2022. I also plan on bringing on more guests on the show, whether that be trusted professionals, estate planning attorneys, real estate professionals, mortgage people, and then also members of Falcon Wealth Advisors. I think it'd be great for our audience to meet some more of our team members and hear more about their roles directly at Falcon Wealth Advisors. So stay tuned for that for 2022. I've been very humbled. Our subscriber count continues to grow, and we get more and more listens from it. So again, like and share our content. Thank you again, and I hope you have a great day.